DeFi crypto systems are not magic. DeFi is simply math. Markets move like a tide. They go up and down like breathing. Once we got to understand that why markets are moving by buyers and sellers, often more and more AI bots these days, then we start to understand how DeFi and liquidity pools work on your behalf. And this is exactly when we don't need to react emotionally. Instead, when the market is in a bear position, we slowly DCA and use more fiat to enter the markets. When the tide shifts, we then already have built a structure. We have built positions. This is how we let the math in markets work for us. In today's episode, I am going to do three things with you. First, we will go through episodes 1 to 10, how to get started in crypto world. Second, I will explain again how DeFi and liquidity pools LPs work. And third, we will go through this week's real actions. We do that by simply collecting LP fees and strengthening our LP structure by adding liquidity and closing one LP and reposition our portfolio into another LP. In episode 1, the crypto detective started from reality. We provide the links to the episodes in the chapters explained below. Crypto is confusing, emotional, and often feels like chaos. The purpose was to show that without a system, crypto feels random. You could be just picking random assets and hope for the price to appreciate. With a system, crypto suddenly become manageable. In episode 2, we explained why Ethereum is the base layer. It is where our DeFi lives, where liquidity pools, LPs exist, and where smart contracts operate. If you understand Ethereum, you understand it is the foundation for the ERC20 crypto network. In episode 3, we introduced the LP ladder strategy. We showed how WETH and USDC can be used to create controlled ranges where capital works actively. Liquidity pools are structured price zones where money works continuously. In episode 4, we moved into TitanX and connected it with wrapped Ethereum. We started building real LP structures inside the ecosystem. We are no longer just observing, we are positioning inside the system. In episode 5, we explored DragonX. We showed how smaller tokens can be paired with TitanX to create additional opportunity layers. Each new token adds another ladder in the system. In episode 6, we went even deeper into even more high-risk, high-reward meme territory with BabyDragonX. But the lesson was not speculation, it was structure. Even meme coins can be used inside a disciplined LP strategy. Remember, our strategy was get more Ethereum, that we get from getting more TitanX, that we can get from DragonX, that will get us to BabyDragonX. Once you start understanding the ratio game, you will also understand the tokens as a different brands of the same product. In episode 7, we introduced what I call the secret engine, TitanX and ORX. This is where the system starts to become powerful. ORX and TitanX together form a core engine for ratio-based growth. And once we understand this, we will then, on the coming episodes, explain how the StableNet protocol works beneath ORX ecosystem. In episode 8, we introduced AURYN. AU is the founding token of the StableNet protocol. In this episode, we explained how AU connects into ORX and creates another layer in the system. We are building a multi-layer system, not just a single LP. In episode 9, we added Helios into the mix. We showed how different tokens can connect into TitanX and expand the ecosystem. We are positioning inside it early. In episode 10, we did our first real LP repositioning. We showed how to collect value and increase ORX exposure through LP mechanics. Rebalancing is not that we would have made a mistake, it is just how the system evolves. Sometimes, as the markets are improving, we have a good time to set a new minimum and new maximum price range for a pair. And of course, when the price is advantaging, we get a better ratio, and with better ratio, we get more tokens. Remember, we simply want to increase our portfolio numbers. Each transaction within the range will earn us fees, and sometimes, like the past month, we already doubled the amount of the tokens inside our LPs. So it means we are going into right directions. Now let's simplify. DeFi allows us to provide liquidity and earn fees. As price moves, tokens shift automatically inside that pool pair. The LPs are automatically converting assets at different ratios. And once we have hit enough, either with rewards or with converting all our tokens into the bigger token, we can close that LP and put the freshly earned tokens into the next pair. That is the real game. We are building pathways into ETH and stablecoins. Today, we are looking at our first accumulation phase. The TitanX ecosystem is at this point relatively small, around $14 million. But even with small volume, the system is already working. We don't need massive scale for LP strategies to function. And as the markets picks up, that means both increased fees and rewards and better ratios if the demand is there. Equally, if there is only sell pressure, we get more of the tokens that are decreasing in the value. At the bear market, we will also have another strategy that we will get into coming episodes. We have used the LP fees from ORX TitanX pools to slightly increase our other LP position. This is the key. We are growing our position using the system itself, not by adding new money, but by letting the pool work. Here, we collected some of ORX and TitanX small fees generated at Uniswap. This is where hidden compounding becomes visible. The system has been working, and now it pays us. It is notable that an LP is producing substantial fees once it hit both tokens to be 1,000 USD. We actually decided to close this one and combine the tokens to another LP that has slightly better price ranges and a bigger LP, but with a wider price range, the rewards are not that good. But again, at this point, we are using the LPs to generate more tokens just by converting them. So the rewards are just extra. We closed one LP that was still in range to optimize the token conversion. Here with this LP, we have created a slightly better positioned ORX TitanX LP with better price levels. This is strategic positioning for when the market moves upward. Again, the buyers and sellers decide the price. We are just simply offering our ORX to this price range to be converted to TitanX. Or if the ratio drops, we would probably get out of range and then we could rebalance again, or keep this and buy more ORX and set another LP slightly lower ranges. Simple math, really. As long as you don't switch higher priced tokens into an LP, which would make you sell them at loss. We also bought more AU with ORX and added it into another AU Church ORX LP. This strengthens another layer of the system that is below ORX. These AU ORX positions are already enough. They also produce and build our LP structure. When the market shifts from fear to greed, we are already in position. Our goal is simple: more ETH, more stable coins, more tokens. With control at some point, this can cover real-life expenses. That is the power of DeFi that we are after. On our next episode, we will look at Torus, a forgotten gem also built on TitanX, already up 100% from the bottom. We will explore how to use it inside the system. Remember, we are not chasing price. We are building LP structures. The price will eventually come to us. Math is mathing, and the goal is simple. Once the LPs are printing, we can do other stuff in life. See you in the next episode. Remember to click subscribe on our channel, Crypto Detective 5.